Hello everyone. My name is Daisuke Matsukawa. I am one of the portfolio managers at Aizawa Asset Management. Please allow me to provide you with one brief comment and outlook on the Japanese equities market for the month of October 2022.
In October, despite solid U.S. economic indicators, a higher than expected announcement of the U.S. CPI and the University of Michigan inflation expectation spurred further concerns for potential Fed rate hikes, leading to a rise in overall U.S. interest rates and a decline in the U.S. stock markets. However, with the resignation of Liz Truss and the election of former Chief Secretary to the Treasury, Rishi Sunak, as Prime Minister, the US market rebounded on the notion that the UK financial market regained composure. This, coupled with news on possible reduction of Fed rate hikes, stabilized the stock market. Meanwhile, in the FX markets, despite intervention by the Bank of Japan to prop up its yen, it was initially unsuccessful, further weakening its currency to a level of 151 against the dollar. This triggered the Bank of Japan to intervene once again, and the yen went back to the upper 140 range. The Japanese stock market swung back and forth during such external environment, but short coverings stimulated by raging US stocks supported the market. Ultimately, the Topix index rose 5.10% and the Mothers index rose 7.22%. The index chart shown has been inclusive of dividends beginning last month. With the Fed's firm stance to fight inflation toning down, it is now the market's view that the series of interest rate hikes are coming to an end, and the market is now focused on where and when the terminal rate will be. Now, US economic indicators will be key factors to pay attention to for the next couple of months, while the question remains on how much of the economic slowdown and poor earnings report will be reflected on the market. Amid a tug-of-war battle between the possible end of Fed rate hikes against poor earnings reports, headlines of the war in Ukraine and the One China policy are increasing uncertainties, and therefore we anticipate volatility to be high, but in a boxed range without a clear direction. We view that downside potential of Japanese equity will be relatively limited due to positive expectations of inbound tourism stocks from border reopenings, in addition to a group of foreign investors viewing the currency state of yen as an opportunity.
As always, thank you for listening to our monthly Aizawa Asset Management market update. We hope our video was helpful, and we look forward to updating again next month.